Is USD being hit by rising coronavirus cases in the US? This so-called second wave. By the way, not really a second wave. In a lot of these states, the first wave never really ended. I mean, there's loads of links you can look at, and New York Times and stuff, they have these good links. You can look at the curves of the spread rate of coronavirus in these various states, and in a lot of them, the initial curve never flattened. It's just a straight line up, pretty much. But anyway, guys, today USD was hit quite hard. Bit of debate going on as to why. One thing definitely hit USD was we've seen risk on in the market today, particularly in FX markets. So if you look at the G10 FX table, AUD is leading, NZD is doing really well. Meanwhile, at the bottom, it's USD, JPY, the Swiss franc, another haven, not doing well. So it's definitely risk on flows have been weighing on the US dollar today. But a lot of people have been pointing at this rising coronavirus cases in the US as a reason why the dollar has been being hit. And to be honest, when you think about it, guys, this argument does make sense, because think about it for a second. There's been a lot of good US data recently. Think back to last week's retail sales data. Dollar was boosted on that data. So being priced into dollar, there has been this US economic optimism, but a second coronavirus wave, more lockdowns, you know, all that kind of stuff that could come with it, is bad for the US economy. So as these cases go up, what we're seeing by the looks of it is the market is pricing out that economic optimism we saw in the wake of that good retail sales data and that good NFP data that came even earlier on this month. Also, another thing, guys, that could be weighing on the dollar today. I made a blog last Friday talking about this. Basically, foreign central banks are using their dollar swap lines with the Fed less. And at the time, I thought this could potentially be a source of USD strength, because it could mean less US dollars in the market. But some people are arguing the opposite. Some people are arguing that the fact that foreign central banks are using these dollar swap lines with the Fed less could actually be a good sign to show that the dollar liquidity in global financial markets is actually much better, and actually could be a source of USD weakness. But guys, this is in the early stage, so we're going to have to see how this all plays out. Really interesting time for the dollar at the moment, because we had that big sell-off. Now we've been consolidating. Let's see what happens next. That is pretty much it from me for now, and I will see you in the next one.